Good morning, everyone. Today is actually 31st of July 2025. It's the last month of the year. It's the last day of the month. Okay. And now it's 11 a.m. We decided to have this session in the morning due to our very busy schedule. Okay. So in the month of August, is actually the theme is month before completion. Let's look at what we mean by month before completion for the August 2025 forecast. For those who are new to this platform, welcome. And this is a platform where it started by both PC and me about I think 3+ years ago. This is our 38th episode already. Every month we have been doing this since I think 2022. Okay, and we apply both Chinese astrology, which is a tool that can forecast the global economy in terms of the trends. Okay, and also PC, he will layer it with his global research um to ensure that we can forecast the global economy, the financial, the global geopolitical events, which could impact the market performances, and in return to help you to make a better investment decision. Okay. The top agenda here will start with the introduction, which I've already done, and then later on I will do some disclaimer and a brief recap of last month's forecast, which we do it um, in every talk to ensure to check to have a check and verification on how accurate our forecasts are, and if there is an inaccuracy, we will also say so. Okay, we will not just cover all those accurate things. As you know, this is a forecast, so definitely nobody can give you 100% accurate forecast. I don't think even the best or the most famous Chinese metaphysics uh, professionals in the world can do that. So we will have influence of the exciting topic, or the influence of the five elements energy in August 2025. What is upcoming in terms of energy and what it means to the global trends from the astrology standpoint. And in August 2025, um, PC will go through his geopolitical and financial forecast using the global trend research for what to expect in August 2025. See whether it aligns with the elemental energy that I have. And then we will wrap up with a summary. Okay. So a disclaimer here that this content is actually purely based on our studies on global trends relation to the five elements, and also to the global in with the global trends research in Chinese astrology to help you to use as a guideline in your investment decision. We are actually could be one of the first to started this kind of um, of study. Okay, so we would like to caution that every one of you all here, in fact, even our global trends and astrology members, that you should exercise caution in your investment, especially in such a volatile situation. Okay, and do your own research on the company that you want to invest. We will not give any stock advice here for our own astrology and global trends members. There will be additional supports in our own Telegram group and through our personal email. Okay, and we analyze different regional economies such as US, Europe, China, and definitely there will be inherent differences or biases from the regional perspectives, and the observation are purely based on our study using from what we have researched through the medias, through the KOL, and it will not reflect any absolute or definitive judgments about any specific regions. Okay. So yeah, so I think we have already introduced ourselves, and then we actually wrote a book I think in 2023 on unlock your wealth potential, which talk about the 5 years in period 9 and the investment trend, which now actually most of the things that in the book has already start to materialize. Yeah. So let's recap on the month of June 2025. What I have stated. Um, I have stated that there's a heaven counter and earth clash in the day pillar and the month pillar, which could cause changes in the government, impact people, and then it will be a hot, humid weather, and the earth is unstable. There are seismic activities, and also there were some frictional crashes in the global power over regulations in the water and earth industries, and some sluggish growth in investment pattern, and it's actually a very quite difficult month for the population in general. We see a lot of layoffs and all this by the corporate, and the tight conditions in terms of liquidity, resource scarcity still continue to haunt the manufacturing world, and also government facing internal strains, societies face psychology fatigue, and um, investors also prefer a safe haven. Okay, and let's look at the headline. Before I go to the headline, this is something that I have talked about last month on Japanese manga that stated that in 5th of July 2025 is likely that that is a big earthquake. Okay, but as forecasted, I stated it did not happen, and thank God it did not happen. Okay, yeah.
However,
So
Evelyn,
yes.
there was a reported 8.5 I think, um, underwater earthquake in the Pacific Ocean. So there has been tsunami warning in West Coast as well as Hawaii, Japan, and Russia.
Yeah, that's right. I also noted that as well. That's why there's some systemic activities. But for the Japan side, luckily it is this one, and thank goodness there is advanced technology on the warning as well. Thanks, busy for the update. So yeah, for the July, yeah, I talk about governments changes, right? So I think there are many governments changes. Governments start to cut jobs, all these things, and there are heavy um artillery fire in the borders of Thailand and Cambodia that has escalated because all the years actually there is always dispute between Thailand and Cambodia on their borders. Okay, but I don't know why this month it's escalated to something to in a more violent skills. And so these are the headlines that align with the prediction. And then we talk about turbulent weathers. Even in Malaysia also we has experienced heat wave, right? It's very hot, in fact. Yeah, and humid. I think everyone agree, right, guys? Do you experience it? Anyone? Yeah, okay, thanks, Clement. Yeah, okay. So yeah, for July, the is a turbulent weather. In fact, it's reported in especially in the tropics up north, in China, in Europe, and also in I think in US is having quite um a heat wave, and at the same time there's also a typhoon, and unfortunately there is also wildfires I think happening in I think across in US, especially because the weather is so dry. Okay, then the earth instability and potential earthquakes. I think yeah, this is what BC has talked about in the Pacific Oceans. I think of the Russia Kamchatka region. Actually, Kamchatka is actually in the northeast. Yeah, okay. It's northeast. Up from I think the peninsula of Korea is actually used to be Manchuria. Yeah, and then in Indonesia, okay, and also Sulawesi, yeah, and also yeah, this one is quite a big news. Where expert one of hidden earthquake threat beneath North America itself. They found that it's quite a big news. You can Google about it. Okay, yeah. So and also global power frictions in maritime in cyber securities. There's quite a number of cyber securities attacks. Okay, and also accusation of China's hackers breaching U.S. National Guard. Ah, okay, so there's a lot of happening also in this area, yeah, in citrix, okay, exploitation, and also password being exposed, and yeah, and also sluggish growth, that that land purchases is also one of the things that remains high because people prefer safe haven. And yeah, it's a difficult, unfortunately, it's a very difficult month for most people, that every now and then, when I log into the linking, I have seen many posts about, today is my last day in, and what company. Okay, so there's a lot of layoff as well. Okay, and yeah, and um yeah, so let's go through the month of August 2025 energy. Okay, August is actually the first month of autumn. It's Li Qiu, means that it's arrival of the autumn month, or where the metal energy is going to be strong. Okay, so and then we know that the monkey and the snake, these are all growth animals. Okay, growth animals, they have either punishment. The I think one of the most complicated relationship among all the animal signs, we have three groups. The groups of the growth animal is the most complicated. They can combine, but at the same time they distract each other. They punish each other as well, and the ungrateful punishment. Okay, so there is also destruction. So it normally, in this month is a bit like the energy is not stable. Okay, so the weather forecasted will be dry and heavy. Okay, and heat wave will still continue. For those that in my Facebook, I've already talked about the Sun Fu Tian, the three dogs day. It's between now and end of summer to autumn, and what health precaution you need to take in order to prepare yourself for the for the upcoming autumn months and also winter month. Okay, this is a Chinese medicines practitioners things. If you look at Sun Fu Tian, you will know that they are using that. So I have tips, and even in my Telegram channel. Later on, for those that have not joined my Telegram channel, you can put it in, because now on and off, I also put in some tips on how you can, health tips related things. Then it's expected that we have increase of international tensions and strategic military posturing, and also natural disasters in a potentially earth heavy charts that could also have earthquakes and landslides and cash flow problems. But there will be potential movement in the metal price. Potential movement, it could be up, it could be down. When I say movement, I cannot accurately forecast that it will be um, up in a way. Okay, but chances that it looks like the trend is going up. Okay, this is only chance. And then another thing is that in the month of August, in the autumn months, actually US will have an upper hand already, because I think the tariff that was sort of imposed by Trump during the summer months, it did not went very well. They have the delay and everything, but somehow or other the energy now is a little bit um diverted to the west itself in the um autumn months. Okay,
I have an answer to that.
okay.
That is the big and beautiful bill, which was signed into law, will allow the US to borrow 5 trillion. So starting from July, they are going to increase the debt by 1 trillion from July to September. So there'll be money flowing into the US economy.
Yes, that's why the energy shows that law. Okay, yeah, the energy also shows this kind of things. That's in the yeah, that's why we need two people to complete the picture. I see this, and then the actor is already onto this. Okay, so yeah, so in terms of the fire, okay, in the month of August 2025, we have hexagram number 64, which is the last hexagram in the 64 hexagram. Okay, so edge 63 is accomplished. It's one of the best hexagram. That means everything accomplished. But after that, because energy comes in cycle, everything comes in cycle. The rotation of the planets around the sun is also in cycle. That's why 64, hexagram number 64 is not yet accomplished. That means we have to start all over again. To hexagram number 1, we start with the Qian hexagram. Okay, so yeah, and they in month of August, actually hexagram number 64 is actually fire, the Li Gua. Li Gua is here. The Li Gua is always hollow in the middle. Those who follow me for a very long time will know that already. Know how to read Li Gua. It also looks like an eye. Okay. Yeah. And then the Kan Gua is water. This one is like water. This one is a bridge over water. Okay. So this is, so this is a transition phase that much of it has not been realized. Okay. And the timing is crucial. So there will be, tension globally and dissolve despite us have a heavy posturing, and then economy, society, there will be a push for reform, renewal. Okay. And yeah, and investor might be positioning themselves for future gains, but however, there's lack of clarity and the feelings of society will have a feeling of uncertainty, fatigue, and also expectation of without resolution. Okay, let me just clear all the drawings. Yeah. Okay. So yeah. So I think this is all for the forecast in the month of August using the hexagram and also using the 八字. Okay. Then so we must remember that this month um the West will have a little bit of upper hand after so many months. They have been sort of encounter. Okay, so good. Yeah. Then we'll go over to PC. Okay. So let's yeah, PC, you can share now. Let me stop
Yeah.
sharing. Yeah, good.
Okay. So what we have is that we make a number of prediction, especially with regard to July because of the risk of tariffs that were poised to take effect. So, but of course, they don't call him tackle for nothing. Okay, tackle means Trump always chicken out. So Trump came to the rescue and delayed the effective date of the tariff to 1st of August. And right now, Trump is saying that the tariffs will start to be uh, in effect from August 1st. But let's see how it is. But on the other hand, the biggest trade with the US is actually one of the biggest trade between the US and other countries is with China. And right now they are working on delaying the further delaying the not sorry not delaying extending the 90 days tariff pause to another 90 days because it's supposed to end in the month of August. So they are going to extend it further. And they have not reached a decision on the extension, but they are working towards the extension. So the stock market continue to be resilient. We say that when the tariffs were implemented in July, it will have an effect on the stock market. So when Trump actually announced that it will be delayed, of course, the stock market rallied and the S&P rose 2.68% month to date as of 29 July, driven by the delay in tariff. And retail investors continue to hawk the limelight, their optimism driven by the passage of the Big Beautiful Bill, Genius Act, and Trump's trade deal announcement. So there's a lot of possibility about Trump's trade deal announcement, but it also indicates the lack of economic understanding among the American public. And that is why it's so easy for Trump to say that these countries are actually paying for the tariff. But in actual fact, the tariffs are actually paid by US consumer and US importers mostly. And I have a table that will show you just the fact. Now, the thing with tariffs is that so much of the public has been brought to believe that other countries are paying the US, and Trump often say that he has negotiated zero tariff in those countries. Okay, that means that the US no need to pay the other countries tariff. So everyone take that as a win, but actually it's not necessary in that kind of understanding that zero tariff means that the other countries will not tariff US because they also have existing sales tax, which means, but then the sales tax is applied throughout. So even American goods or Chinese goods that a country imported, they will still be subject to the sales tax. It doesn't mean that American goods go into that country and there's no tax at all. Okay. As long as consumers buy it, there'll be a sales tax, also sometimes called the VAT, okay, VAT, value added tax. So all this jingoism and what Trump announced sometimes, is some deviation from the truth. And we mentioned that the GDP forecast for Atlanta was 2.9%, and there's chance that the GDP could fall below that. But yesterday GDP report came out that it rose 3% year on year in Q2. So, but with two revisions due in the coming weeks, the jury is still out. So it could be reviewed much lower, okay, as has been the case in Q1. But I'm going to show you a set of very interesting um, economic indicators from the US and how it has been manipulated to show the narrative. So what we got correct, okay, we predicted that sorry, this is what we, not what we predict corrected, but this is what we predicted to happen in Europe. Just let me add on here. So this is where there were some divergence from the prediction. Now in Europe, we predicted that the euro and the British pound could strengthen further against the US dollar, but the reverse happened after US Treasury yields started rising over the month. The 10-year US Treasury yield rose 11.8 basis point from 4.214 to 4.332 month to date as of 30 July. And as of 28 July, so that goes to show I need to constantly update, okay, as the data flows in. So as of 30th July, US dollar strengthened 0.019 against the euro and 0.034 against the British pound. So what we anticipated did not happen because at that time, the US was actually a lot of prediction that the US yields would go down because there's so many expectations of Federal Reserve will cut interest rate. But as we know from yesterday, FOMC, the Federal Reserve did not cut, and US yields continue to stay high. And the other thing was that the US dollar was further strengthened by several trade deal announcements, which on paper were in favor of the US dollar. So the thing is, when you announce trade deals that are far, that there is a lot of deviation from what is actually happening, and the investment community bet on it, and therefore there is a strengthening of the US dollar. One of the key things is that one of the trade deals was between the EU and the US, where the US announced that the EU would invest 600 billion into the US economy and 750 billion of purchases from the US for energy. So that means that the EU countries need to buy energy in US dollar as well as when they invest in the US, they need to convert euro into US dollar. So that means there will be an influx of demand for US dollar. And because of that, the US dollar started to strengthen against the euro. And also because of the weak economy in UK, the British pound also weakened against the US dollar. So because we expected that the euro will strengthen, we also think that a stronger euro would actually see a sub 2% inflation, but inflation actually rose, okay, to 2% in June. And the EU and US averted a trade war with the US tariff on EU goods now reduced from 30% to 15%, but still an aluminium be subject to 50% tariff. We earlier predicted that because of the friction between the two trading blocs, okay, US and Euro, and the EU, there will be there will be difficulties in coming to an understanding. But we are not far from being wrong, okay? Because what happens within the EU is very different from what Trump announced, and we will dissect the EU-US trade deal afterwards. But with the 50% tariff on aluminium and steel remain, this is going to hurt the US auto manufacturers. So this is something that is not good for US manufacturing. Now, where we got it right, in the US, we predicted that uncertainties pertaining to rising costs of debt in the US and the weak US dollar will drive investors to go. So even though the US dollar strengthened against other currency like the euro or the British pound, but it weakened against gold because investors are losing trust in the US, the US government to meet its debt payment because the debt continued to rise, and therefore investors are shunning in investing in US bonds. And because of that, they prefer to, like last month, I show you the chart, they are actually reducing their US dollar reserves and buying gold. So gold rose $77 per ounce or 2.33% month to date. And you can see that it has risen from 3,304 to 3,381 as of the 30th of July. But after last night FOMC meeting where the Fed didn't cut interest rate, as usual, the bullion banks came in and smashed the price of gold and silver lower. But um, the long-term prospect of gold and silver has not changed a bit, and I will show you why. Now, the internal turmoil continued to hog the limelight in US with regard to the Epstein files, ICE raid, and more recently, a potential Obama indictment. As reported in the media, they showed that Obama was the person behind the Russian hoax. So that is why there are speculation that Obama may be indicted, but actually being the president, they actually have immunity. But we also warned that the lack of trade deals resulted in Trump unleashing a series of tariffs against multiple countries. So those in the red are the most recent negotiated or implemented tariff. Now, Brazil was hit by another 50% tariff yesterday, last night, because they are actually buying Russian oil. Trump already warned that countries like Brazil, India, and China, who are big purchasers of Russian oil, will be added additional tariffs. So India was hit
Oh,
with 25%.
it's
Okay,
really
Brazil
bad, huh?
was, yeah. So uh, they say that if China still continue to buy oil from Russia, they will hit China with 100% more tariff. So I think this is just a lot of posturing. Like Evelyn say, there's a lot of geopolitical posturing. But if they increase the tariff in China by 100%, then the consumer goods in the US would
Yeah.
actually rise
Yeah,
much
people
higher.
will suffer. That's right.
Yes, yes. But the US Trump admin is on the side of the page where they still insist that the countries are paying the tariff to the US. And because I think there's a lack of awareness, economic awareness among the US population that they believe in such a
Narrative.
uh, narrative, which in fact is actually a lie. Okay,
Yeah,
so
it's actually supply chain. It's all passed down,
yes,
and the
yes,
last who is at the bottom of the supply chain is consumer like us.
yeah.
Yeah.
So
So we are the one who are paying everything that happens in the upstream.
yeah, so that goes to show that their consumers are so easily bluffed by the government's narrative. Okay, so there's still a lack of progress with regard to the trade talks with China and new discussion being held in Stockholm from 28 to 29 July. Parties agreed to work on extending the pause in tariffs for another 90 days without a deal. So there's not going to be a deal because the US wants China to continue to supply rare earth minerals magnet. But China will not do so because ultimately those magnets will be converted into weapons that are directed towards China. And China is already very aggressively trying to decouple from the US. And so much that even in June, where their export to the US is down 16%, they still achieve a record trade surplus. So it's like China is ready not to trade with the US. So if they go 100%, then China say, okay, we'll raise another, 100%. But past 100%, as China say, it does the trade has no more any viability. Okay, but more worryingly, the leading economic index continued to weaken, with the June figure falling 0.3%. Now, but the US GDP is up. We will dissect all this later. So in Europe, where we got right, in the absence of strong industrial base and ongoing privatization efforts, saw the UK inflation rising 3.4% year on year in May to 3.6% in June. So uh, the UK is actually in a very big problem. They actually have a very big problem. And the strange thing is the UK is supporting the US. They are right now the second largest holder of US treasuries after Japan. Previously, China was the second one. But China has been dumping US treasuries in favor of gold. So the UK, instead of putting the money into their economy, they are buying US treasury and funding the US economy. So that's why UK is actually going to have a steep fall from grace. Okay, because the UK is mired in so many political problems and economic and financial issues. So as we predicted, the EU and China did not see eye to eye on a number of issues, and the EU delegation left China a day without a trade deal. So the first thing that they do when they arrive in China, um, the two ladies from EU, Ursula and Cages from, I think, from one of the Baltic countries. They went to China and criticized China for supporting Russia and also for overcapacity. Instead of looking at points where they can actually work together, they went there and criticized China, so they left
Oh,
within a day. So that's called, that's called negotiating for a trade deal. It's like imposing on China, you shouldn't do this, shouldn't do that. And China doesn't care, okay, because there is right now, in our book, Unlock Your Wealth Potential, for the readers who have bought it, we mentioned that sooner or later there'll be breakup in the EU. And we are already seeing that. Okay. The Eastern EU states like Hungary, Czech Republic, and Poland, they are anti-immigration. The Western side are pro-immigration, but look at um, the kind of civil disorder that these countries are facing. Because there's a lot of illegal immigrants that they actually subsidize at the expense of their own citizens. So on the other hand, okay, there are countries like Spain that wants to invest in China, wants to work with China to develop the economy, because in the whole world, the only country that has the capacity to invest in multiple projects is China. The US doesn't. Okay. You remember Biden came out with the um, Build Back Better, okay, BBB. Like 3B is not enough. 3B, that 3B is not enough. They come up with another 3B version 2, Big Beautiful Bill. Okay. So there are so many BBBs that the US have announced, but the Build Back Better has nowhere to go because there's no money. Okay. And Japan government last time, who is sponsoring a lot of infrastructure project in Asia, right now they are almost near bankruptcy. The Japanese yen has depreciated a lot, giving rise to tremendous inflation in Japan, where price of rice have risen by more than 100%. And the Japanese government cannot control inflation because the minute the Bank of Japan increase interest rate, the amount of bonds that the government owns, okay, will not be able to be paid when upon maturity, or even to serve the interest payment. So the Japanese bonds, being a large chunk of the government's liability, doesn't allow Japan to invest everywhere else. Okay, so you have UK on the verge of collapse in their economy and financial, or even the prosperity of the country, and Canada, who is also mired um, in a lot of issues like the collapse of the real estate market, and Italy, who are neither here nor there. So the G7 is actually disintegrating. And because of some countries wanting to work with China, like Hungary, Spain, Germany, they want to work with China because otherwise their automobile industry will be dead. So because of that, there is a lot of um, people who are not happy with how the EU implements um, its negotiation tactics with China. So that is why we predicted that sooner or later, okay, the EU will actually break up, and or more countries would seek independence from the EU. And the other thing is that the ongoing protest, whether it's anti-Israel or anti-immigration in Europe, has seen more authoritarian response from the respective governments. You can see that anyone who is protesting will be arrested, okay, such that you know, and UK right now, anyone who goes on the internet need to key in their ID and all those so that they can keep track of what you do. And um, in in the UK also, if you are uh, pro-British or anti-immigrants, you also will be arrested. And here they are, these governments that are arresting their people for free speech and freedom of demonstration, are lecturing China that about genocide in Xinjiang, lecturing China on freedom of expression and free speech. So you can see that how disingenuous, okay, the EU government is. So with the EU and UK still facing contraction in their manufacturing, the EU Q2 GDP forecast have been revised down from 0.9% from 1.3%, while the UK Q2 GDP is expected to come in lower than the 0.7% reported in Q1 and in 2025. So we already mentioned that all this will actually bring the EU GDP down and the UK GDP down, so that on the longer term of a 10-year chart, you can see that the economy of the EU and UK is actually stuck in a stagflation. In China, where we got it right, China's GDP came in at 5.2% year on year, in line with the government's target of 5%. China's inflation came in at 0.1% in June, allowing its per capita disposable income to reach 21,840 renminbi during the January to June period, marking a 5.3% year-on-year increase in nominal terms and 5.4% after deducting price factors. Now, because China on the half-year period, they actually have slight the inflation actually was around negative 0.1%. So even if you have an increase in nominal, but if you put in that, there's a drop in the price by 0.1%, then their nominal then their gross disposable income actually increased by 0.1%. Hence, it's from 5.3% to 5.4%. So as expected, there were no trade deals between the US and China, and the 90-day in tariff pause was extended. So China continues to expand its international gold vaults, with a new one added in Saudi Arabia. So last episode, we talked that China is aggressively going around with trading nations, setting up gold vaults because they want to internationalize the renminbi and allowing the renminbi that is surplus renminbi with any countries. There will be a regional vault whereby they can convert the renminbi into gold. So this is also what we have written in our 2023 book, Unlock Your Wealth Potential, and we continue to upgrade every year with our yearbook. Okay, so look out for our 2026 Year of the Horse
It will be
yearbook.
I think October. We will publish it in October. Maybe
Yeah,
or end of September normally, because we always update and then trying to get the latest data. We already
yes,
started writing this month. Okay, normally we already started writing, but it's just that we cannot release it. This is not the AI book, not AI written one. Okay, I can tell you that. So we continue to update to all these things to ensure that we use definitely we use AI for editing. That's all. If I use AI work,
yeah.
okay, yeah.
Yeah, the kind of research done is tremendous. Okay, sometimes we have written, like when we have written from, let's say, August to September, then October something happened, then we have to do a lot of editing ourselves. Okay, because changes in data, changes
Mm.
in government policy,
Yeah.
which will actually affect what is going to happen next
Yeah,
year.
yeah, because AI will not learn that fast, because all the AI data has their update, their learning, because we know that there are train AI training and all these things, so they will not be able to catch the trend so fast.
Yeah.
Okay.
So another thing is that the AI is also being impacted from what people write online. So the AI is not something that is able to think by itself, rationalize government policy. It is based on what people write online. Okay. So then it will gather all the whatever people have written, and then it will then take the most frequently written uh, that is biased on certain issues, then it will just say that is what is happening. Okay,
Yeah.
so uh, it's not it's not something that they can look at multiple scenarios and then
Yes.
rationalize that these are
Yes.
what that can happen.
Yeah,
But
definitely. Because they have been
if
trained. It's
yeah,
just a training data. They have been trained. And I am an
yes,
AI trainer. Okay.
yeah,
So if anyone were to say about all these things about I think both of us we all have the authority to talk, more about AI than anybody else also. Okay.
yeah.
Yeah, go ahead.
Afterwards,
Yes.
I will have a very interesting slide on China's AI and the divergence from Silicon Valley. Someone from US wrote it, and I think it's very enlightening. So let's look at US economic indicator. CPI rose 0.3% month on month in June. Year on year, it grew 2.7%, up from 2.4% in May. So you can see that inflation are actually ticking up, but later you will see that most of the inflation is being suppressed. Okay, and that's a method to suppress it. So core CPI rose 0.1% in month on month in June. Year on year rose 2.9%, up from 2.8% in May. PPI unchanged month on month in June. Year on year it gained 2.3%, down from 2.7% in May. So retail sales rose 0.6% in June. Year on year, it gained 3.9%, up from 3.3% in May. Net retail sales less CPI was 0.6%. So industrial production rose. So sometimes I update the data, but forgot to change the sentence. Month on month in June, year on year, it rose 0.7%, up from 0.6% in May. Durable goods orders plunged 9.3% month on month in June. Year on year, it rose 12.6%. The NAHB index came in at 33 in June, up from 30 in July, up from 34 in June. So the NAHB index is actually the home builders index. And you can see that when the home builders confidence is still in contraction, that is why there's a stall in US housing. Now, US, you can see that even though housing starts jump 4.6% month on month in June, housing permits rose 0.2% month on month, but then new home sales rose only 0.6% month on month in June, but year on year it fell 6.6%. That means that, when home builders build homes, those homes are sold as new homes. So if year on year they fell 6.6%, that means that a lot of people are not buying the new homes. And therefore, builders are not going to expand their inventory because there's no sales to generate that kind of expansion of inventories. So existing home sales dropped 2.7% month on month in June, unchanged year on year. So preliminary PMI for manufacturing in July came in at 49.5, which is a contraction, while preliminary PMI for services came in at 55.2. The Conference Board Leading Economic Index, or LEI, for the US declined 0.3% in June after no change in May, which was revised upwards from negative 0.1% originally reported. As a result, the LEI fell by 2.8% over the first half of 2025, a substantially faster rate of decline than negative 1.3% contraction over the second half of 2024. So you can see that after there were some attempts to push the LEI up, but right now it's coming down. So if we look at previous trends, whenever there's something that goes down, then comes up, there's a good chance that it will be much deeper. And I think looking at before we have this recording session, there's a lot of we have a number of people very well versed, okay, in Chinese astrology, who are actually commenting that 2026 can be a great challenge for many people. Okay. So
Yeah,
likelihood,
that's
if it,
already an indication, right, of this
yeah,
happening. Yeah, BC.
so if let's say it continue like previous trend, it bounce up, then it comes down deep, okay, like over here, then if this happen, the dip will be quite deep, okay, because most of all these rise and dip were happening around at the zero level. Right now we are happening below the zero level, so the depth of the fall could be much steeper if we base it on previous trends. Now, let's break down the US Q2 GDP. Personal consumption added 0.98% to the GDP, up from 0.31% in Q1. But one thing that I will demonstrate afterwards, consumption is driven primarily by debt. Okay, so on one hand, it looks nice on the GDP, but on the other hand, the consumers are gathering even more debt. Now, the other thing is that one thing to boost the consumption of the GDP is by managing the inflation figure. That means that if the price of goods increase, okay, it goes into the nominal GDP. But if US report net GDP, which is actually less inflation. But if I can suppress inflation, that means that any price increase, if I suppress it, will contribute to the GDP. And I have proof to show it afterwards. So fixed investment came in at 0.08%, down from the 1.31% in Q1 due to falling sales in properties, and the NHB is in contraction. Big drop in private inventories, falling 3.1% as retailers unloaded all their inventory they accumulated ahead of the tariff. Now, this will be replenished in Q3 as the pause in US-China tariff are extended for another 90 days. Now, this is assuming that they will actually extend because both parties are working towards extending it. So trade or net exports came in at a whopping 4.99% increase, the biggest addition to the GDP number as imports collapsed and added 5.18% to the GDP, a stark reversal to the negative 4.66% contraction in Q1. Now, this is because a lot of them has front run the tariff in Q1, getting in a lot of imports. So in Q2, there is lesser imports because they already front run the inventory in Q1. So therefore, less imports in Q2 and the trade actually went up. But if let's say retail sales are actually going up, that inventory will be consumed. And that means that in Q3, we can expect that inventories will be replenished and expect a surge in imports. Therefore, the 3% GDP growth will be tough challenge to be met again in Q3. Finally, government added just 0.08% to GDP, a reversal of the negative 0.1% subtraction in Q1. But we could see an increase in spending in Q3 due to the Big Beautiful Bill, which has raised the debt ceiling. So government could be spending much more, but if you look at it, the US economy is driven by almost 70% on consumption. And if let's say consumption price rises because so many tariff, price can actually rise, you manage the inflation down, and then you have a very good GDP figure. Now, if we look at with the if we look at the kind of thing that is happening, the inflation, okay, with minimum of 10% tariffs being the norm during the period from April to June, the CPI, core CPI, and PPI are surely not reflecting a similar scale of inflation. Now, that could mean a few things. Retailers and importers are absorbing or partially absorbing the cost of the tariffs or through shrinkflation. Now, shrinkflation is a process where you can hide inflation because you can have the same packaging size, but the quantity content is actually reduced. Okay. Uh, I like to use this example. If you buy a tube of Pringles, easily when you open it, 10 years ago or a few years ago, the Pringles will be at the top. Right now, when you open it, it's 20% less. Okay. So the other thing is that exporters are subsidizing or partially subsidizing the tariff. And this is unlikely as most of the tariffs were collected by the US government, which means that they were paid upon entry into the US. Now, a slowdown in spending, which helps to keep inflation in check, and this is not likely as well because retail sales rose in July. So the more probability is a complete set of falsified data by the BLS or Bureau of Labor Statistics to hide the true inflation. Now, this is not uncommon as shadowstats.com has previously shown how the BLS has manipulated the CPI since 1990. And this is how inflation is being managed. So you can see that the BS is inflated as the BLS keep the inflation down. Now, this is prior. Actual data plunged to less than 70%, okay, which means it's in the 60% region plus from more than 90%. So this is actual data collected, which means they actually screen through the goods that are sold. And guesswork rose from less than 10% to more than 30%. Now, guesswork means like agak-agak, suka-suka, okay, and that's it. And that is how when they compile the data, it actually helps to lower. Because if my guesswork is, well, I think, like Trump used to say, grocery prices are actually down. Well, if Trump says so, then we just assume that grocery prices are actually down. And then we use lesser data from actual, and then we suggested that, well, let's keep it manageable. And instead of rising 10%, well, let's say it rose 5%. And when you compile it together, the net impact is lower inflation. And because US reported its GDP net of inflation, the lower the inflation, the higher the GDP. Okay, but interestingly, you can see that all this happened, okay, when US economy is facing some challenges. It happened over here during the COVID, where they actually try to manage the inflation. But this time it's very steep because what happened before June? The tariff. So all this happened during the tariff period because they want to undermine the impact of the tariff on inflation. And you can see that how it did wonders for the Q2 GDP. Now, this chart is not from me, okay? It's directly from the BLS. It's just that some people, some analysts, really go through the layers of paperwork to come out with this. Because the BLS will try to be as honest as possible while they give the general picture that can be used as a headline to push the stock market higher or push a generally more rosy picture, but they will still be truthful in their statistics compilation. Okay, and these are all hidden beneath layers of commentary. And luckily, we have economists that actually go through all this so that we can share charts like this. And inflation shock is definitely coming. Okay, now Walmart already announced that Walmart hiked prices amid Trump tariffs, some items to see double-digit increases. So Walmart is ready, sending out a warning. And here it shows why I say that retail sales, which is actually the biggest contributor to the US GDP, is driven by consumer debt. Now, BNPL is skyrocketing in the US. If you compare just 6 years ago, okay, it is just slightly above, maybe if we look at here, maybe about 5 billion. Right now, okay, it's more than 100 billion, which means that the consumer are using the buy now, pay later way of consumption. And that means that it has increased by almost 20 times. So if we look at what the consumer bought with BNPL loans, clothing, home decor, so many of all these things. So these are not just grocery, okay, but common retail goods. If let's say grocery, then you know they it is just food, maybe beverage and household item, but right now they even need it for clothes.
You
Okay,
buy things that are not necessary, right?
yeah. So
Yeah,
that
it's so sad.
that goes to show that the debt of the consumer is exploding. Why they go into BNPL? Okay, because total consumer credit card debt right now is 1.098 trillion. You can see how consumer debt has kept on increasing, all the way subsidizing the US economy. And if you want to compare, okay, the overall US household, their savings, if I'm not wrong, is less than a trillion US dollars. It's in few hundred billions, if I'm not wrong. But in China, the consumer savings, less of their gold purchases, okay, is more than 20 trillion. So the Chinese consumers no need to go into debt to finance their purchases. But the US, they need to go to debt to finance their purchases. Okay. So here, another warning about retail sales. UPS CEO announces closure of more buildings and sort centers as Amazon volume decreases. So, but it's not all. UPS is also cutting down on headcount. 20,000 job cuts, 73 facilities closing, 50% drop in Amazon volume. So this is telling you that coming quarters is not going to be rosy. And this is July, yeah. Okay. So if let's say Amazon volume drop by 50%, how come the consumption, which is the larger part of the economy, can grow by 0.98%? That is because of price increase. Now, price increase will actually cover for the volume drop because of inflation. Now, if I want to make a picture rosier, then I just reduce the inflation, and then the world suddenly realize, wow, US consumption is still strong. But Amazon is reporting 50% drop in volume. And Amazon is one of the largest retailer. So that goes to show that higher prices, lower volume, and it's all done by controlling inflation to come up with a rosy picture. And this is the real problem about debt, US consumer debt. Now, credit card debt has the highest delinquency at 12.31%. So when you are delinquent in your credit card, you cannot have, you have maxed out your credit card. What do? There are other, okay? Other is the BNPL. Other category include consumer finance, sales financing, personal loans, and retail financing. You see clothing? Just now we showed that BNPL highest is actually apparel, clothing, grocery, departmental store, home furnishing, gas, etc. So when they have maxed out this one and they are in delinquent by 12.31%, let's go to BNPL. Now, BNPL now delinquency is rising to 9.4%. So where else can they actually push for more credit? So the next one probably will be mortgage delinquency. Okay, because once you have maxed out your credit card, your BNPL, you still need to survive. And you need to finance your consumption. So one of the things then would be putting up your house for sale or refinancing your house so that they get the money to consume. And right now, in a lot of states, there are actually an increase in the homes that are offered for sale, especially in Texas, Florida, because of few things. One is that the A&B business model is dead because tourist arrival in US has dropped tremendously. Of course, it will drop because anyone that is doesn't doesn't look like a US citizen will be arrested, okay, and deported because they come in as tourists, but they will be threatened. So people are very afraid of this because there are several reports that show that Canadian tourists are being arrested, tourists from South America are being arrested. So tourism will drop. When tourism will drop, N&B will drop, and therefore those people who bought the homes or invested in homes will rely on the N&B rental to actually pay for their mortgages. So when this is not being met by influx of tourism, they would actually be forced to sell their homes. And others, because of their debt burden, they will refinance their home to get the money to pay off, let's say, their credit card debt or BNPL loan, student loan. But they will not get enough money to pay for their mortgage loan. And what's happening right now is that there are more job cuts among the permanent workers. So that is why every job growth you see that beats the forecast are actually accumulated part-time jobs. And the US has a wonderful way of calculating their jobs growth because one part-time job is equal to one employed person, even though one person may require three part-time jobs to survive. So if let's say there are three part-time jobs, they will say that 3% are employed. But actually it could be one person doing three part-time jobs. So that is how data is being managed to drive a narrative that everything is rosy. And talk about the US budget surplus. Now, the US government saw a surplus of just over 27 billion in June, following a $316 billion deficit in May. And custom duties total about 27 billion in June, up from 23 billion in May, and a 301% year-on-year increase. But who actually paid the tariff? Now, this is a breakdown. So exporter to US percentage of tariff paid, yes. In June, some exporters actually helped subsidize the tariff. Okay, they paid 10.5%. But US importer paid 58.6%, consumer paid 30.8%. So overall, consumer and importers paid 89.4% of the tariff, debunking Trump's claims that exporters will foot the entire tariff bill. So even though the US have this kind of data available, the Trump admin is so blatant in lying to the public that other countries are paying the entire tariff bill. As long as they keep this narrative, they say that zero tariff charge for US goods, but here they pay the tariff, people are so happy, okay? And even though some investors are investors are financially savvy, but for those who believe in the narrative, then they will actually think that everything is rosy with the US economy. Okay, so this is another thing, okay, about the US. While budget surplus in June provides a cause for celebration, the big beautiful bill was not signed into law until 4th July. So BBB raised the debt ceiling by 1.5 trillion. Okay, of course, raising the debt ceiling has everything to do with it, injecting economy with a new lifeline. According to Wolf Richard from Wolf of Wall Street, US debt rose by 441 billion by the third week of July after the debt ceiling was raised. So according to estimates, US will likely borrow more than 1 trillion from July to September. So the celebration may be a bit premature. And here it shows that the US will be on track to borrow 4 trillion per year. And if let's say July to September will raise 1 trillion, okay, then with July itself about 500 billion. So already that 5 trillion limit within this year itself will be expanded 1.5 trillion. And I believe by next year, the US could face another debt ceiling issue again. Because if the US would, here already is burning about 1.5 trillion up to September. And from September to December, probably will be another trillion. So that will be 2.5 trillion, which 2.5 trillion remaining for the whole of next year. But looking at the trend, the US would require 4 trillion. So that is why the US debt is now out of control. Now, what will happen to the US in August? Now, we could likely see spending increase in the US with the passage of the Big Beautiful Bill, and the performance of the S&P will match the injection of M2 money supply. That means that as long as the US print money, people will continue to invest, okay, because of two things. One, fear of inflation. They prefer to put their money into companies that work for them to generate income. But the other thing is that when the M2 money supplies goes up, people have a sense that the economy is being stimulated. But a lot of people are still not going into gold or silver, despite the threat of inflation. As I have shown many times, okay, since 2000 till now, gold has actually outperformed the S&P. The S&P is still around less than 400%. I think it's 300 over percent, but gold has already reached more than 1000% of gains over since the year 2000. So the more money that's being injected, the higher the price will be for gold. Even the silver outperformed the S&P. Okay, so Trump would want to maintain the cost of the stock market, and that means pressuring the Fed to cut. The Fed didn't cut yesterday. They maintained the rates, and you know what comes next? I saw a post from Trump stating that the Fed will be looking at cutting in September. And then he says that with the GDP at 3%, the Fed should be cutting interest rate. I think everyone say that Trump plays 3D, 4D, 5D, 6D chess, but the basics of economy, he still cannot understand. No wonder he has been into so many bankruptcies. The thing is, if let's say the GDP continues to go up, it will create a pressure for demand of goods or services, which actually increases inflation. So how can you cut interest rate when the GDP is running hot? So this is something that he cannot grasp, okay? So inflation will continue to rise as retailers will be forced to increase price as the tariffs bite. You can see that just now I mentioned Walmart is going to increase price. As shown, it is the US consumers and importers who are paying the bulk of the tariffs. We also see increase in delinquencies as the pressure of debt payment mounts amid a weakening economy. So just now the delinquency report came out in Q1, so let's all await for Q2. And the loss of trust in US dollar will lead to US Treasury yields being stubbornly high. A weak US dollar will ensure that the price of commodities will remain high. And Trump also suggested that countries which import Russian oil, China, India, Brazil, will be tariffed severely. Now, this will lead to higher oil price if put into action and reignite a commodity-driven inflation. So demand for gold from central banks will rise, pushing the price of gold higher, and silver will rise in tandem, but will be aided by a severe shortage of physical silver for delivery. Now, for those who have members who doesn't have the weekly report, this is the latest update. Now, altogether, the bullion banks are facing a net loss in short positions by 77.5 billion in gold and 9.4 billion in silver as of 25th of July 2025. So you can imagine why the bullion banks have been busy smashing the price of gold and silver throughout this week, because they need to cover their shorts. But the more that they shorted, the more the global south countries will buy gold and demand for gold delivery. Now, not only that, recently there has been a few KOLs in China that are urging the people to buy silver. And Russia has already incorporated silver as another reserve for its central bank. So covering all these shorts will actually ignite a short squeeze on the precious metals, and more internal political turmoil in the US. And if we look at the euro area, CPI came in at 2% year on year in June, up from 1.9% in May. UK CPI came in at 3.6% year on year in June, up from 3.4% in May. Euro retail sales rose 1.8% year-on-year in May, down from 2.7% in April. Now, if you look at it, Euro area sales is 1.8%, but in May, it is 1.9%. So retail sales in Europe, net retail sales is actually in negative, okay? UK retail sales rose 1.7% year-on-year in June, up from negative 1.1% in May. But even though it has risen 1.7%, net CPI is actually negative 1.9. So that is why I mean that the Europe economy will remain in stagflation, because consumption is part of the greater part of the economy. The other is actually in industrial. But if you look at the industrial, German manufacturing PMI came in at 49.2, which is in contraction. Okay, while June services PMI came in at 50.1. France manufacturing came in at 48.4, also a contraction, while June services came in at 49.7, another contraction. So if we look at it, UK manufacturing came in at 48.2, services at 51.2. France is actually the weaker of the economy. Okay. So US, breaking down the US trade deal, yeah. US EU trade deal also includes 750 billion of energy purchases from EU and a further investment of 600 billion in the US over the 3 years, besides the 15% tariff. But these are some points to consider. Now, these people who are well versed in the EU political scene are commenting. Okay, the trade deal brokered by Trump and Ursula is not finalized or legally binding. It's all talk. To become law, the deal must be ratified by the European Parliament, all 27 EU member state parliaments. So that means that the deal is not signed because it's not been ratified and agreed upon by all the 27 members of the EU Parliament. Okay, but people like to hear good news, and therefore they trigger the algorithm to invest accordingly. Now, the EU pledge to buy 250 billion of US energy supplies per year is unrealistic because it would require the redirection of most US energy exports towards Europe, and the EU has little control over the energy of its companies' imports. So this is what Reuters reported. Now the thing is, the European Ursula may agree, okay, but the European Union Parliament may disagree. And on top of that, the EU government has no jurisdiction over what their companies import or export within the group. Okay, so the deal is not legally binding. It is the EU companies, not the EU Commission, that is buying the energy. According to a publication from CNBC, increasing US oil exports to the EU is difficult because production is flat and will likely decline in the coming months. Okay, that is according to Svetlana Tretyakova, an oil analyst at Rystad. So according to aastocks.com, citing foreign media, US President Donald Trump claimed that EU has agreed to invest 600 billion in the US as part of a trade agreement. However, EU officials said that the substantial expenditure will be undertaken by several private companies, and the EU doesn't have a say in corporate spending priorities. So, conclusion, more unrealistic optics by Trump. Okay, so people are analyzing it and breaking it down that actually it's a nothing burger because it will depends on the companies whether what they want to do and how they want to do with their money. So what could happen to the EU? In August, EU-US trade deal could come under fire in the EU Parliament as the deal negotiated by Ursula has a thin majority of support in the Parliament. Now, for those who follow EU political scene, Ursula was made president of the EU by a very thin margin. She does not have a huge majority support. Now, the effect of interest rate cuts by ECB and BOE are finally trickling into the economy. May see a slight improvement, but inflation could offset the net benefits of the economy. That's why we see that some of the PMI have risen slightly. So Q2 GDP in Europe will remain muted, anchoring the stagflation in the economy. More vocal support from Europe on the plight of the Palestinians in Gaza. Anti-migration crisis will be long-drawn affair with potential violence escalating. If you read news, there's recently have been a lot of stabbing and gang fights in Europe involving immigrants. So let's look at China's economic indicator. GDP came in at 5.2% year on year. First half came in at 5.3%. CPI rose 0.1% in June, up from negative 0.1% in May. So core CPI rose 0.7% in June, up from 0.6% in May. PPI came in at negative 3.6% year on year in June, down from 3.3% in May. So PPI is coming down, even though inflation is up slightly. But I think what China does is that they actually benchmark their energy costs and such that is according to the commodities, and on top of that, most of the companies that supply energy are actually state-owned enterprises where they don't charge on they charge to achieve profit but not on an astronomical basis. For example, some of the US power companies, you do not see them expanding their assets, but then they still enjoy revenue growth because as long as there's demand, they can actually increase price, and they can, because it's privatized, okay? So that is why China's ambition is to maintain the stability of pricing. And on top of that, a lot of factories right now in China, they are actually reducing the amount of manpower in multiple facilities so that the cost of manufacturing is down because they consume much lesser on needing the um, the lighting and such, okay, but concentrating on sensors to run the manufacturing. So the factory can run on in dark mode. So retail sales climbed 4.8% in June, down from 6.4% in May. H1 retail sales saw a growth of 5%. So retail sales have been hit by price war in big ticket items such as NEVs and huge volume items like food and beverage amid competition to drive up sales. So there has been a lot of competition in China where they are undercutting each other to drive volume in sales. But thankfully, Chinese government has put its foot down and warned various parties against involution. Involution means that I'm sacrificing my profit, okay, to have better sales. So this is actually right because if they sacrifice their profit to generate much higher in sales without additional cash flow, then R&D will be impacted. And China thrives on being a leader in technology in its products, okay, so that they can actually command better price. So that's why the Chinese government has stepped in. And if let's say a lot of the businesses heed the Chinese government's warning, then we will likely see retail sales improving because right now it's being driven down by price war. So industrial output rose 6.8% year on year in June, up from 5.8% in May. H1 industrial output grew 6.4% year on year. Pickup in industrial activities was driven by exports as export demand as China reached a new record in trade surplus. So fixed asset investment rose 2.8% year on year. In the first half, investment in infrastructure construction went up 4.6% year on year, while manufacturing investment increased 7.5%. Investment in property development fell 11.2%. So property and real estate is still a problem in China. Survey urban unemployment rate on average stood at 5% in June, unchanged from May. As I mentioned, China's per capita income has seen a growth. China's trade surplus widened to 114.77 billion in June, up from 98.94 billion year on year and exceeding the market expectations of 109 billion. So this is a record trade surplus in a period where export to US declined by 16%. Export rose by 5.8% year on year, up from 4.8% in May. Imports increased 1.1% in June, rebounding from a 3.4% decline in May. Now, as I mentioned many times, China is moving towards self-sufficiency, and the more exports that they grow, it will not be met by even a much a growth in tandem in terms of export. Here you can see that export rose 5.8%, but import only rose 1.1%. So export is fast outpacing imports growth. So China export growth continued to outpace import growth, thereby helping to sustain its high trade surplus. So China's property market showed further signs of stabilization in June, with home prices declines continue to narrow and housing inventory falling for a fourth straight month. Now this is important because if housing inventory continues to fall, it will reach a point whereby they need to build more properties and expand the housing inventory. Now that would set a cycle of growth. But we need to see more signs of stabilization. In the first four tier cities, Beijing, Shanghai, Guangzhou, and Shenzhen, new home prices dropped 1.4% year-on-year. And you can see that the decline narrowed by negative 0.3 percentage point. Notably, Shanghai, the country's economic hub, recorded a 6% year-on-year increase in new home prices. So Shanghai is the first one that recorded a substantial increase. Second and tier cities saw new home prices fall by 3% and 4.6% respectively, and the decline narrowing by negative 0.5 percentage point and negative 0.3 percentage point. Total floor area of unsold commercial housing nationwide dropped by 4.79 million square meter at the end of June compared with the end of May, marking the fourth consecutive month of decline. So there are signs that it is declining. So that is the reason why last year I mentioned, or early this year I mentioned that as long as China stabilize, housing market stabilize, you can actually look into Chinese insurance companies. Okay, I think I mentioned about China reinsurance when it was below 80 cents. I think right now is trading. Since I sold it, I've not keep track. The last time I sold it, it was $1.28. Probably right now is hovering around there in the 130 region. And those who bought Ping An when it was in the 30 something, right now is much higher. So insurance companies are the best indicator of a recovering real estate, because otherwise their share price would not rise. If their share price rise, that means the housing, the real estate market is recovering. But if you are a long-term player, as I say, you might want to pick up cheap cement or steel and building materials companies, whether in the Hong Kong or China market, but it will be a slow burn. Okay, that means you needn't buy huge volume. You can gradually accumulate, because when the housing inventory drops substantially and there's a need to actually increase, then that's when their price would actually increase in tandem. But they are at more risk because we do not know the extent of how long it will take. Okay, but insurance companies are showing the way. So while the above are signs of a recovery in China's real estate market, the recovery will likely to be painstakingly slow. So another indicator of China's robust economy is that China's electricity consumption rose 5.4% year-on-year in June, okay, to 667 billion kilowatt hour. Power consumption by primary and secondary industries rose 4.9% and 3.2% to 13.3 billion and 548 billion kilowatt hour respectively. So you can see that primary industries actually has lesser consumption, but secondary industry has a very huge consumption. Now, this goes to show that secondary industries are mostly those SMEs and such, yeah, medium-sized companies. So power consumed by tertiary sector increased 9.9% year-on-year to 175.8 billion kilowatt hour. Electricity consumption of the country's residents total 129.1 billion kilowatt hour, a year-on-year increase of 10.8%. In the first half, China total power use climbed 3.7% year-on-year to over 4.84 trillion kilowatt hour. Now, this is a very nice a post from Carlo Edoardo Ferraris on Twitter, where he actually listened to a commentary by one of Alibaba's key architects in AI. So he broke it down to this: China's AI philosophy is to build slow, build deep, and build to last, whereas the US is to build fast and bring it to the users so that they can start charging. So AI is being integrated at the infrastructure and industrial levels, and China doesn't see AI as a product, they see it as infrastructure. that mindset shift changes everything. Silicon Valley is optimizing for user growth. Beijing is optimizing for national resilience. This isn't a startup game. It is a civilization shift. Okay. And this is the huge difference between the US and China. So already we are seeing all this in the integration of AI, AIoT, IoT, 5G, EVs, and robotics in manufacturing facilities, ports operations, mines, and smart cities. So already in mining operation, they have, because China has a lot of coal mine accidents in history. So what they do right now, using Huawei technology, they are integrated into their entire mine operation, where the operators are staying in an air-conditioned room with multiple screens and doing the, um, you know, moving the machines that are doing the mining.
Yeah.
So what will
Yeah.
happen
Okay.
to China? Yeah,
Yeah, the
David,
concept
you
about
want to say
AI
something?
actually about the AI of China and compared to US because now US is moving towards agentic, but unfortunately a lot of bad reviews on agentic kind of AI also. They are not very stable and they are feeling like mad. I just read in headline, this morning. So this is the proof that AI US AI is there in a hurry to build in, new feature promising, all these things that agent can cover everything, which some of them
Yeah.
feel miserably. Okay.
Yeah. For
Yeah.
example, they say that the AI they actually benchmark using a PA. The AI can't even book flight, book hotel and all those that
Yeah.
meets
These are
the
agentic.
yeah that meets the boss's requirement. So that's the huge difference. So China doesn't care about um the AI in terms of services. You can see the implication of it is the integration of it is all into manufacturing, smart cities, mines. Those are productive assets. How to use AI in productive assets. But the US use AI as a productive asset. Okay, so it's different. So one is AI in productive asset, one is AI as productive asset. So that is why the differences. So back to what will happen in August. China economic indicators will continue to register growth amid the challenging economic environment. Inflation will remain within a tight range. I think unlikely we'll see huge bump of 0.3 or 0.5% increase in inflation because China would actually maintain a price that is steady. China will continue to fine-tune its policies to adapt to the challenging economic environment, and that means monitoring the price war among companies to ensure compliance and the government's directive, and continuing the trade-in program to ensure consumption is maintained. So we can expect more opening up of China's financial sector to foreign companies, and and recently China actually started a new project um, in the island of Hainan. Hainan will become duty free. So that means that they want to encourage people to invest and all those and can move their money anywhere they want. Now the thing is that there's a lot of restriction in moving huge sum of money from China to the outside world. Okay, there's limitations of up to 10,000 US dollar. But if let's say they use Hainan as a test case of a duty-free across the board, then people can move their money in whatever the sums, okay? Then that would be something that could, start expanding in China because China likes to do things in certain locations first before they expand it across the board. Just like in Shenzhen, the first opening up, then they open up in Shanghai, gradually to other cities. So China likes to do things on small scale, monitor how to fine tune it, and then they enlarge it to a bigger scale. So China will expedite its de-dollarization with the incorporation of the renminbi in international trade backed by gold. Some sources say that the next gold war will likely to be in Singapore, but let's see. Okay. Therefore, we can expect more international gold wards to be opened in major financial centers. We could see Chinese investors moving into silver because lately there's been some KOLs suggesting that further stabilization of the real estate market in China. And in terms of geopolitics, tension in the Middle East remains, with conflicts being active in southern Lebanon, Gaza, West Bank, Syria, and the Red Sea. Pause of conflict between Israel and Iran is temporary. Maybe, this may see increased rhetoric between Iran, Israel, and the US because Trump said that they will bomb Iran a second time if, let's say, they continue with their uranium enrichment. Okay, US is being granted access via Armenia and Azerbaijan along the corridor north of Iran. US may be positioning to launch a military strike from there. Okay, so Iran is a very important country, not only to BRICS but to the US. If Iran is broken down, then it will expose the underbelly of Russia, and that is why Iran uh, is an important piece of the geopolitical chessboard. Now, Thailand and Cambodia reached a ceasefire brokered by Malaysia. Although Trump wanted to say, "Hey, I also uh, help in it. I also have helped to negotiate a ceasefire." So negotiation is important to keep the peace. In Europe, Russia has intensified its strikes on major cities in Ukraine to push Zelensky into surrendering. Right now, there's no more special military operation (SMO). Right now is pressuring Zelensky to really surrender. Okay. Now, many talks in NATO to attack Kaliningrad, which is a Russia enclave enveloped by NATO countries. However, this risks triggering a major war across Europe. Now, Kaliningrad is an enclave that Russia captured during the Second World War because it has access to the Baltics. The Russia have maintained it, but it is separated from motherland Russia. Okay, and it's only linked by a rail uh, transport system which Russia controls. So there are talks that NATO say they can actually uh, take over the country, okay, to show that um, they are able to do so and to transmit to Russia that the NATO has the ability to wage war with Russia. But of course, Kaliningrad also have nuclear bombs, okay, and attacking it may trigger a chain reaction. So, Evelyn, back to you.
Yeah, okay. Let me just this one share again. Okay. Um,
Sorry for today's session is rather long, but there's so many things that come out.
yeah,
I
so
just want to
many.
share.
Yeah, that's right.
Yeah.
Okay. So yeah, let's do a little bit of introduction of our membership first. Let me just put it up in a full mode. Okay, so those who have not considered joining, those who have not joined us as a member, do consider join us at the Astrology and Global Trends membership now. We have a special offer, and you will get this book 2025 for free. Okay, so the membership now for comprehensive is only 99 ringgit. Okay, you will have a welcome gift of a list of high dividend yield share, early access to our monthly forecast full recording like today we open for public, but it will not be available in our YouTube channel until 14 days later, or PC's Ruber's channel only 14 days later. But for members, if they miss it, they will immediately get the access to the monthly forecast recording, I think by tomorrow or the day after tomorrow. And also the presentation slides we presented in this um talk as well in PDF format, and they will get to join the Telegram group for discussions where we will have discussion on updated things, and also on some stock studies. Okay, some stock or company studies that are potentially have good growth. Okay, so far we are on the right track. Then on 20 and also you will have 2025 Astrology and Global Trends annual talk access and the book itself, and monthly since this we also include Chinese astrology, so we have like monthly investors manifestation direction, and also special discount on our course. We just finished one on period 9 where a lot of people have gained insights to the course. So on premium member, you will have weekly report insights onto the weekly market report prepared by PC, and some are now three victory Chiman Palace, which if those people who knows Chiman, this is not easy to prepare, and also daily Chiman deity direction as well. A plus. So it's 187 now. And then the cost, if you buy the cost of accelerate your wealth future in period 9 is actually 698. You will get a comprehensive member, and also the cost, the replay of astrology and personal finance cost of 2024, the period 9 cost as well, and then the free course on how to pick a growth stock. Okay, so the cost alone on this 2025 edition of period 9 course accelerate your wealth in period 9 um, in 2025 is already 548. So, and this course contain all the secrets and timing about investment. We do very in-depth company studies as well. Okay, I think so far this is the testimonial from our students that have attended, that uh, most of them says that they will revamp their portfolio, and then we have been trusted to deliver our research, and this course is very very um um it is is it give you a very comprehensive and quality content. Okay, and extremely valuable if you are looking into investment. Okay, so yeah, thanks to Gilbert also. This is what he has given here. He's here today as well. So all these testimonial are real. There's no, we do not put in all those
I
testimonial that's
generated.
yeah inflated testimonial. We don't have to do that also. Okay, we don't have to do that. Okay, so remember, we ourselves also invested, and we have done multiple gains in our own portfolio as well. Okay, so it's not it's not this one. So we have, but we like to share, that's why we come up with this platform of astrology and global trends, and we only charge like very minimal for for all these things. We don't charge us 5 6 figure for this platform. Okay, yeah. So this is our what people have say about us. Even gold prices, I think those are followers since the beginning. This is what it happens. Even silver now starts to go up as well. Okay, so we already talked about that 2 years or 3 years ago. Okay, just go alone. Okay, and then these are some of the portfolios we have studied, some of the companies we study. Even this also is too good to be true. I think some of the members are making very big money. It inflated the price suddenly. In fact, this one is found by accident, to be very frank. We just find the potential of this company, but we did not realize that suddenly it shot up after January. Okay, by
actually,
multiple times.
actually, it reached $7 Hong Kong, but right now
Yeah,
it's trading back to about $6 and 60 cents and so. But even that, most of it was being bought at about less than 30 cents.
yeah, that's right. Now it's renamed the Moon Incorporated because there's a takeover. Okay, in fact, when PC, when it was suspended, the time PC, was communicating with me offline, and then I do achievement study and all these things. So I told him, what is going on behind the closed door, and it really happens. Okay, so these are even Bitcoin also. We have done the study, and now it's all time high. But for those invest in Bitcoin, please beware. Okay. So yeah, so let's go through the summary of what happens. Yeah, there will be tensions. In August, that superpower tension, the mark as diplomacy, shaky alliances, and then potential again. Once again, very sorry to say, there will be potentially Earth-related disaster. Weather will be dry and heavy. Okay, and then investors may be positioning themselves for future gains. In fact, just now I received uh you know uh, 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 this one a message from a well-known analyst telling me that the REITs is performing very well in Busan now because of just now I say in July everyone is going towards a safe haven, and it also aligned to my forecast. So there will be potential metal price movement, and this could be better month for West, especially US. We already know the reason just now. PC already uncover the reason why. So go ahead, PC, to do the global tension escalation.
Yeah. Uh, Evelyn, maybe you can put in the link for the membership. I didn't put in just now.
Oh, okay. I need to quit from here. It's a bit messy.
Oh,
I
okay, okay.
okay, yeah, because I'm showing the slide. You see,
Oh, okay.
yeah.
So,
Maybe later on you finish.
okay,
You can put in the link. Okay.
okay. So, global tension will escalate due to conflicts, and sanctions and tariff. Pause in conflicts may not last, and diplomacy takes a back seat because everyone is now, right now, is uh, using the iron fist to settle disputes. So the Trump will support the market with more liquidity as US debt hit new highs. Due to global tension, uncontrollable inflation, and currency devaluation, investors will move to precious metals.
Hmm. Okay. So I think we can put in the um yeah, maybe we can put in the form. If those are interested can consider joining us. Actually, it's a very special offer for now. Okay. So yeah, we're open for Q&A.